Hello and welcome to Business Incorporated live on Channels Television. Still a rainy trading day right here. Here's what's coming up on the program. Global oil demand could be heading for its first annual decline since the pandemic. The International Energy Agency says high energy prices, weak economic activity are weighing. I would say Bitcoin there down for the first half of 2026, about 34%. What's next for the second half? And gold is on course for a weekly loss as easing safe haven demand and the stronger US dollar, that's weighing on prices. And it's great to have you join us. I'm Ladi Williams. First off, let's get a check on what's playing out with the commodities now. We've seen oil prices edging lower and early trading today as markets weigh the economic impact of rising inflation against escalating tensions between the United States and Iran. I feel at this point, investors are getting tired of waiting for peace, real peace between these countries and real de-escalation. But right now, we see natural gas, that's lost the $3 mark. At the time we took the numbers there, Brent crude 0.13% lower, $76.19. After that big jump we saw yesterday on escalation there. WTI, that's down 0.14%. So even though we're seeing oil dropping, so far, still up for a weekly gain. At this point, at the close of trade today, we did see both benchmarks there, dropping earlier, but picking up the pace again with U.S. and Iran, attacking ships again. All right. Meanwhile, the world's appetite for oil, that's showing signs of slowing. The International Energy Agency now says global oil demand is on track for its first annual decline since the COVID-19 pandemic, as high fuel prices, supply disruptions, and economic uncertainty that's curbed consumption. The outlook raises fresh questions about the future of crude prices, OPEC Plus strategy, and the revenue prospects of oil-producing nations, that's including Nigeria. Let's look at metals now. Gold prices edge higher today, trading as a weaker U.S. dollar offered support to the precious metal there. But the only one trading higher, that's palladium, 1.48%, $1,272 per ounce. Spot gold, seeing a big drop there, $4,115, still holding on to that $4,000 level. Spot silver, 1.31% lower, $59.95. And we see copper there, just near flat, about 0.04%. And platinum holding on $1,629 per ounce. It remains on course for a weekly loss so far as investors are weighing the inflationary risk of escalating U.S. Iran tensions. And they're also looking at the U.S. Fed, trying to understand the path when it comes to interest rate cuts. At this point, we're seeing prospects of rate hikes, going forward right now, and also seeing some, hawkish statements coming from the U.S. Fed, and definitely we have a wash-led U.S. Fed right now. So much to look out for right there. Well, let's look at other countries now. Tanzania, they're stepping up efforts to tackle youth unemployment with the launch of a 200 billion shilling youth loan scheme aimed at expanding access to finance for young entrepreneurs and small businesses. The initiative is expected to support enterprise development, create jobs, and stimulate economic growth as governments across Africa look for new ways to harness the continent's growing youth population. And to other matters now, sustainability moves from a corporate responsibility to a business imperative. Stakeholders across Africa are calling for stronger collaboration between regulators, financial institutions, and the private sector to drive climate action and sustainable economic growth. At the FITC Sustainability Conference, regulators, business leaders called for ESG-driven economic transformation. Take a listen.
Climate change is no longer just an environmental issue. It is increasingly influencing investment flows, business competitiveness, and long-term economic growth. Against this backdrop, business leaders, regulators, policymakers, and development finance institutions gathered in Lagos for the third edition of the FITC Sustainability and ESG Conference to discuss practical solutions for building a more sustainable Africa.
What is important to us is that there should be a movement from conversation to commitment. And so today's conference brings together an exceptional cross-section of Africans who are leading different ecosystems in businesses, executives and board chairs and regulators and policymakers in diverse sectors, and also, very importantly, sustainability practitioners.
Regulators say climate risk is increasingly becoming a financial risk, requiring banks and financial institutions to strengthen sustainable financing frameworks while supporting investments that promote resilience and inclusive economic growth.
The CBN, on its own part, has integrated a lot of green finance and sustainable financing model into its banking regulation to ensure that the green financing and sustainability gain traction in Nigeria. In the light of this, I am confident that the insights generated from today's conference will contribute meaningfully to advancing Africa's sustainable development.
Of course, nature is very, very kind, but oftentimes very comical. That we're speaking about sustainability now, and the rains are all year. And we can see exactly why this is a very important part of our living.
Chairman of the MTN Foundation urged organizations to embed sustainability into long-term business planning.
Africa stands at a defining moment. The choices we make today will shape the continent we leave for future generations. We can continue to pursue growth measured only by economic output. Or we can do that, or we can pursue growth that creates lasting value, growth that protects our environment, empowers our people, strengthens institutions, and expands opportunity for all.
When we Africans believe in ourselves and we say, well, this is Africa, we must fight it together. President Clinton came to this country some years ago. He said, Nigerians, you have no business going all over the world. Your resources are here. And he was tapping the floor. He knew what he was talking about. You think all those foreign countries coming over here, because we know that we are endowed with a lot of mineral and natural resources. You look at, Prof was talking about mining, 30% of mining all over the world. They are in Africa. So the point is that how do we Africans come together as one pool and trust ourselves? Because the moment we don't trust ourselves, there's no way we can do business together.
As climate challenges intensify and investor expectations evolve, stakeholders say stronger partnerships between government, regulators, and the private sector will be critical to financing Africa's transition to a more sustainable and resilient economy.
Gender matters now. Unlocking the full economic potential of women is increasingly being recognized as one of Nigeria's biggest opportunities for growth. Yet despite their contributions to business, entrepreneurship, and the workforce, women continue to face barriers to finance, leadership, and economic participation. Now, government development partners, regulators, and private sector are joining forces to change that. At the launch of the Nigeria Gender Country program in Lagos, stakeholders said advancing women's inclusion is not only a matter of equality, but a strategic economic priority that could boost productivity, attract investment, and drive sustainable growth.
NGM's group, as a market infrastructure institution, sits at the intersection of where companies, investors, regulators, and capital providers meet. And so from that vantage point, we see this evolution clearly. It is within this context that the Nigeria Gender Country Program is not just timely, it is necessary. This program is not a standalone gender initiative, as has been presented, of course, but it is one that brings together the strength of a lot of partnership. A few weeks ago, we convened the CEO Roundtable, a conversation with corporate Nigeria about how businesses could collectively accelerate women's economic participation while building stronger, more resilient organizations. And to be honest about that, what we found in the room was very, very, very supportive and very enlightening. We expected engagement, we expected commitment, and we got it in the room then. Today, we move from that conversation to implementation, from shared commitment to measurable action, from ambition to delivery.
All right, let's look at food security now. The Nigeria Food Summit 2026, in collaboration with the Lagos State government, they launched their national communications campaign unveiling this year's theme, Gastronomy in Nigeria, Journey to Standardization. Government officials, food industry leaders, strategic partners, hospitality professionals, and 15 accredited media organizations who are in attendance agree with the keynote address by the chief convener, Captain Gwalagwo Gibbs, that standardization is the missing link in unlocking the full economic potential of Nigeria's food industry. Take a listen.
Our staples are what will make us popular. So suya, pepper soup, amala, abula, afang. Afang is one of my best soups, by the way. Fisherman soup. These are the things that will make us popular. These are the things that will make people realize that we have technique, we have history, right? Then when we land on that table, the next conversation is ingredients, right? Because we have amazing ingredients. So how do we take our ingredients and transform them into amazing things? Because even these staples were transformed based on by people using ingredients, right? So how do we take our ingredients? So for example, our ingredients, our staples are backed by several decades of history, culture, tradition, agriculture, tourism, business. These are all the things that are fueling what we have today. And so we're saying, let us take those same factors and fuel the next generation, the next future of the conversation around our food.
What we see is that food is beyond just production. Food is actually going into the nooks and crannies of our everyday lives. It's part of our tradition, it's part of our culture. It's a way of life for us, and therefore we must elevate it beyond what we are doing currently. A lot of other climes, a lot of other nations, a lot of other states, they make so much money from food. But what we have in Nigeria is we have so much resources. We have the land, we have the human capital, we have so many things going for us. But yet we see so much in terms of food waste, we see so much in terms of post-harvest losses. We just don't seem to have it all put together. And we believe that when we start connecting actors and people start to understand their place with regards to how important they are in the food ecosystem, then we'll start working together as a collective and not in silos, and therefore we'll get to that food security level that we want Nigeria to get to.
To entertainment, Nigeria's creative industry is increasingly being recognized as a major driver of economic growth. But stakeholders say its full potential will remain untapped without stronger legal protections and a more structured business environment. Industry leaders and policymakers and entrepreneurs gathered in Lagos to explore ways of strengthening brand identity, protecting intellectual property, and creating the right framework to help Nigerian creatives compete globally. Take a listen.
The Lagos Chamber of Commerce and Industry is focusing on creative and entertainment as its groups holds an engaging session of learning, networking, and business growth. The theme is enhancing visibility, identity, and business networking in the creative economy. Tips from professional perspective.
Networking treated as an event activity rather than a continuous business function. It is a huge misconception to think networking only happens at conferences. Now let's address visibility, identity, and networking. Not as abstract concepts, but as working framework you can apply almost immediately.
And the Chamber plans for even bigger collaboration.
What we're trying to establish here is that brand enhancement is the bedrock of a successful business. And at the Chambers, what we're trying to do is bring creativity with commerce and make them friends.
Bring the financial group out of our 36 other group that we have, the ICT, our finance group, our insurance group, all of them to collaborate together and make this a new wave in Nollywood and in the creative industry totally to be able to be bankable around the world and be a bigger source of income for Nigeria in terms of foreign exchange.
They've set out a roadmap to continue this conversation.
All right, now let's find out what's playing out with markets that we track now, starting on the African continent. We see the NGX there switching from positive to negative, but it's been mostly flat at intraday, 243,000 points. We did see financial services stocks, getting attention. The likes of Zenith, First Holdco, getting attention, and some other, tier 2 and Tier 1 banks, Johannesburg Stock Exchange looking much better, 0.55% higher, 110,000 points level, and that's been reclaimed. Flip over to other parts of the market now. See the EGX 30, 0.54%. I guess that's close for yesterday, and the Nairobi Stock Exchange down 0.82% for the trade. Yesterday. Other parts now. Let's look at the Gulf region now. We see markets close low on Thursday, extending the previous session's losses as renewed hostilities between the United States and Iran. That weighed on investor sentiment. I see Dubai's index there, 0.70% higher. The Abu Dhabi index, 0.53% higher. Still trading at this point. Flip over to other parts of the market now. Saudi Arabia, Qatari indexes. Those were closed, I believe, for yesterday, 0.42%. Qatari index, 0.84%. That's for the trade yesterday. Let's see other parts now. That's looking at the U.S. Futures, stock futures, 0.22%. Dow Jones Industrial Average futures at 52,000 points. The tech-heavy Nasdaq is down 0.27%. Speed off now to Asia. Let's see what played out with Asia markets. They're looking much better. The close 2.52% for the Kospi. Hang Seng Index 0.60% higher. Other parts of the market in Asia now, we see the Shanghai Composite that closed 1% lower. Nifty 50 looking much better, 24,206 points, 1.02% higher. Let's get a check now on Europe. Let's see what's happening in Europe. We have Lars Holter there. Great to have you, Lars. So how's the TGIF trade over in Europe?
Yeah, Ladi, it's very, very calm today. As a matter of fact, we're not seeing much moving at all the European indices barely moving. That is the one thing actually that they have in common. The difference though for London, Paris and Madrid, the little bit of movement that we're seeing is to the upside, and for the DAX in Frankfurt, it is to the downside. It certainly really doesn't matter because we're really talking about minute moves here. But it does tell a bit of a story, as there is a reason why the DAX is doing just a little bit worse than the others. We got a lot of bad news from the auto sector here in Germany, with Volkswagen seeing their revenue drop by more than 8%, with BMW also saying they registered further drops in China. So it's not a good day for that sector, and that weighs a little bit on German markets in particular.
And speaking of cars, I know Volkswagen, they're actually in so much trouble that they had a day-long board meeting yesterday in an effort to find ways out of the crisis. What are you hearing about this? How did the meeting go?
Yeah, Ladi, talks there at Volkswagen went late into the night. The biggest car maker says they need to scale down drastically, as they're selling approximately 1 million fewer cars per year than they have been just a few years ago, which means, of course, that they have to decrease their capacity to lower cost. Volkswagen's profit is currently down 26%. Now, looking at some details here, Volkswagen wants to cut half their models in an effort to just streamline their product palette. They will also have to make major cuts in the workforce, cut up to 120,000 of their 650,000 jobs, which is even more than even the most pessimistic expectations. 4 plants are likely to be closed, including an Audi plant. However, none of those details have been confirmed, actually, despite the board literally meeting all day.
So why are they in this situation right now? What are the reactions to changes that they're making?
Well, it's really easy, and we discussed it before, Ladies, because pretty much like some of the other German companies, Volkswagen, they've seen their sales evaporate, really, especially on their biggest 2 markets. The United States, of course, has become really difficult due to tariffs that German car makers are paying under the Trump administration, and then China has built up its own extremely strong car sector, and it turns out that Chinese competitors are just doing better, and some of the German models are simply not in demand anymore. They can't compete with Chinese cars. Partially, it's also because of higher costs. Volkswagen, just like other companies in Germany, they've long been complaining about high labor costs, high taxes. So they just find it hard to compete there. And as for the reactions, they're pretty much, Ladi, as you could imagine. People are very upset. Obviously, they're worried about their livelihood. People protesting in front of Volkswagen headquarters yesterday saying this is a slap in the face for us. People are worried about their livelihoods and the entire region, as a matter of fact, because it's just so many jobs that are on the line here.
Right, I guess we'll keep tracking that. It's a developing story. Thanks so much, Lars, and have a great weekend.
And you too, Ladi. Thank you.
All right, let's get a check on what's playing out. The crypto market so far, definitely we're seeing a recovery. That's for trading today. But looking at the first half of 2026, Bitcoin kicked off January at $88,000, 731. June 30th, that's for the end of the first half, $58,558. There's been a recovery so far since it hit that level. But for the first half of 2026, Bitcoin down about 34% so far. And I'm sure investors will be wondering, what next for the second half of 2026? Let's bring in Rume Ofi now, financial market analyst. Hello, Rume.
Hello, Ladi. Good afternoon to you.
Yeah, good afternoon, Rume. Definitely quite a bad start for the first half of 2026 for Bitcoin. And at this point, we're in the second half, and we're not seeing signs that Bitcoin can, recover most of the lost ground. How are you seeing it so far?
Yes, it's a classic volatile correction from what happened last year, late 2025. In fact, let's give it up for Bitcoin. We've seen a situation whereby the market moved from some few years ago, I think about 50K to 125. It's not supposed to go up and up and up. So there has to be some breather. That's why we're seeing this downward movement. And right about now, we're still seeing that movement between 60 to 65. It's still something fairly that we could watch, because the market is trying to understand the new dynamics. We're seeing that attention has moved from crypto to all of this AI narrative, and you don't have to worry about where people need to put their money
right
at some point, because people want to make profits.
I guess at this
so
time,
I'm personally looking at a situation where,
I guess at this time, this is where some say we're not in it for the money, we're in it for the tech. Seeing that Bitcoin, is down so much, but let's flip over to regulation now. Definitely, we've seen some moves when it comes to regulation in Nigeria. I guess not much attention on price, but on regulation at this point. How are you seeing what's played out with the Securities and Exchange Commission so far, admitting some of these companies?
Yeah, Ladi, I'm very happy that you said no more price because I love the fact that Nigeria is actually meeting up to its responsibility. Kudos to the president, Commander-in-Chief, President Bola Ahmed Tinubu, for seeing that, for hearing our cry in this industry, that we need to save ourselves and also need to lead Africa convincingly well, because the young people here are taking this industry out of the continent. So all these platforms that are being approved by the SEC makes a whole lot of sense. Welcome them to the IRI program, so that we all sit down together with stakeholders to fashion out ways to have a very, very robust framework for industry. We are ahead Europe as far as I'm concerned, because the EU could not manage its regulatory framework, and they send a lot of exchange platforms like Binance and a lot of that packing, So, but we are bringing ours together and making sure that we have a regulation that best fits our ecosystem. Once upon a time, crypto was banned in this country, but that's not the case right about now, which means that there's a renewal of our minds, and no more crypto is scam or crypto is this. Crypto is part, and as relation to the promise made in the last election, that is going to, crypto and blockchain is going to be used to power our financial system. I think this is just the step in the right direction, and I hope more will happen, so that our young people don't run to run offshore or run abroad to make the needed value happen.
Right, and I guess running abroad is not an option now. Seeing what's happening, when look at xenophobia and all of that. So you want to stay here and develop, this part. Abroad is not an option. Thank you so much, Rumi.
Exactly, Laddie. Exactly, Laddie. This is the only country where you cannot be deported, and I'm very sure you know that.
Right,
Laddie. You can't
exactly.
be deported here.
Yeah,
Thank
I'd
you.
rather stay here. Thank you so much, Rumi. And definitely that's where we anchor the show today. We'll give you more updates. Keep tracking these shows so you know where to put money going into next week. Thank you so much for watching Business Incorporated. I'm Laddie Williams. Remember, buy low and sell high. Bye-bye.